Hey everyone, it's October 8th, 2018. Big to do about interest rates going up with a 10-year yield topping 3% for the first time in a while. Here's a long-term chart. Let's start with the monthly on the 10-year. You can see that there is a trend line here. It's not great, and you could say that, well, it kind of broke it and it's still moving sideways. So as far as the trend line goes, it's probably not a great trend line, and we'll change that in a second. But you can see in the short term, it looks like there is a short-term breakout here. So is this the end of the bear market in rates, bull market in bond prices that we've seen since 1980? It could be. So let's take a look a little deeper. I'm going to change this into a log scale format, and you can see it's a little different trend line with 1, 2, arguable 3, 4, 5 hits, and arguable breakout here. And you can see that that's a pretty big double bottom. I don't know if the indicators agree with it, but it looks like a big reversal there. Let's zoom in. Kind of a reversal there, but this seems to have been the floor, and the trend definitely is to the upside right now. Let's come in a little bit on the weekly chart, and you can see that again, the trend line is not the greatest trend line, but this resistance line, there's the short-term resistance, a little longer-term resistance that goes back. It's not perfect, but that's fine. You can see a short-term breakout here. Now, I don't know if this is the start of a bull market in yields. I mean, we've already had a pretty big bull market in yields already for the last 2 years, but I'm not so sure that it's up, and away from here. I'm not saying it's not, but I'm still not convinced. All right, now I'm going to put it back to linear. We're going to go to the 30-year yield, which is a much more pure measure of interest rates. The 10-year is kind of used for a lot of things, mortgages, sovereign debt, the whole deal. And let's go back to the monthly, and you can see that this trend line, going back to the 1994 peak, not bad. 1 hit, 2, 3, 4, arguable 5, 6, and then a much better breakout. You can see this resistance level. We come in on the weekly, much better breakout here on the short term. If we come into the daily, though, you can see not quite overbought, but let's come into the daily. And you can see that's quite a spurt higher in the last couple of days. Pretty much overbought in the short term. So for me, I'm not jumping on the bullish breakout bandwagon completely. I do think rates are going to head higher. The Fed has said so, and blah, blah, blah with the Fed and long-term rates. You know, the relationship there isn't perfect. But it does look like rates are heading higher. Not necessarily a bad thing. People are panicking at the rate of the increase rather than just the increase itself, saying that this is the fastest speed of increase percentage-wise that we've seen in a long time, and each time that happened, it led to a recession. Well, I'll wait and see what happens there. But for me, for rates, I do think we have a breakout. I think it's overdone right here. We'll come back out to the long-term view, because the big question is this a generational change in trend? 1994 to, say, 2016, the bear market in yields. Is this the start of the bull market? In this chart, it's more convincing than on the 10-year. Maybe that's just a difference in the shift of the yield curve. I don't know. But I do think that from the interest rate point of view, you have to play it like rates are going to be heading higher eventually, smoothly, roughly, jumping around. I don't know. Just going to play it that way, thinking that interest rate sensitive stocks and other items might have some headwinds here. So I'm going to leave it there. Maybe I'll come back to the short-term chart again just to show you one more time how overbought this thing is. And as long as we're here, I'm sorry, I'll always jump around. I never have these things planned out. Just drawing a support level on the rates, bring it down just a little bit. And if I measure this, you know, it doesn't have to be perfect. Pick up that arrow, stick it to the breakout level. How high can it go? According to this chart, 350. Oops. 350 is the approximate area. Let's see where that stacks up in the big picture. It's a breakout. It would be a long-term breakout. I'm not going to say it's going to go much higher than there. We have to see what happens when it gets there. But, you know, until this level here, the 4 level gets taken out, you still don't really have the long-term higher highs. Just something to keep in mind. And that's kind of it. We'll see you next time.